Have you ever wondered why the straight-A students who did everything right often end up spending their professional lives working for the C students? Robert Kiyosaki grew up seeing this dynamic firsthand. His biological father was highly educated, holding a PhD and serving as the head of education for the state of Hawaii. But despite his academic brilliance, his poor dad constantly struggled with debt and financial pressure. Then there was his best friend's father. This rich dad never even finished the 8th grade, yet he was on his way to becoming one of the wealthiest men in Hawaii, building an empire of warehouses, construction companies, and restaurants. Growing up with these two vastly different role models was a unique advantage. When one dad said, "The love of money is the root of all evil," the other claimed, "The lack of money is the root of all evil." Instead of just accepting one viewpoint, young Robert was forced to compare their philosophies and decide which path to follow. If you want to explore the exact lessons he chose to learn, hit that subscribe button to know the book, where we break down life-changing literature piece by piece. Kiyosaki realized early on that building wealth doesn't start by simply getting a good job. It starts by choosing to prioritize financial education over professional titles and academic degrees. The journey really began when Robert was 9 years old. He and his friend Mike weren't invited to a classmate's beach house for the weekend. The reason? They were considered the poor kids. Seeing the other parents driving up in their shiny new Cadillacs sparked a burning desire in the boys to learn how to make money. Their first attempt at wealth creation involved melting down empty toothpaste tubes to forge lead nickels, literally trying to make money. After Robert's dad gently explained the concept of counterfeiting, he sent the boys to Rich Dad, who offered them a weekend job dusting shelves for a measly 10 cents an hour. It didn't take long for the boys to hate the grueling, low-paying work. But that was exactly the point. Rich Dad was introducing them to the rat race. He explained that most people are driven by two emotions: the fear of not having enough money, which forces them to get a job, and the greed or desire for things, which makes them spend their entire paycheck. That cycle keeps them trapped. To break them out of this employee mindset, Rich Dad gave them a test. He took away the 10 cents an hour and told them to keep working for absolutely nothing. He wanted to starve their reliance on a paycheck, so their brains would be forced to look for real business opportunities. It worked. Once they stopped obsessing over a tiny hourly wage, they noticed the store manager throwing away unsold comic books. The boys struck a deal, opened a library in Mike's basement, charged neighborhood kids admission, and suddenly they had a business generating its own cash. This became the foundation for Rich Dad's first major lesson. The poor and middle class spend their lives working for money. The rich build and acquire assets that make money work for them. If you want to acquire those assets, you have to understand the most important rule of financial literacy. You must know the absolute difference between an asset and a liability. This diagram shows Rich Dad's definition. Forget the complex accounting jargon. An asset is simply anything that puts money into your pocket. A liability is anything that takes money out of your pocket. This is where most people get tripped up, especially when it comes to their primary residence. If it requires a mortgage, maintenance, and property taxes that drain your bank account, it is functionally a liability. This directional flow of cash explains why highly educated professionals, like doctors and lawyers, can earn massive salaries and still drown in debt. They focus entirely on their income column, trying to get a raise, while the wealthy focus entirely on expanding their asset column. True financial security doesn't come from a high-paying profession. It comes from acquiring a column of income-generating assets so deep and robust that they eventually cover your living expenses and pay for your luxuries. As your assets grow, you run into the challenge of taxation. Rich Dad had a controversial take here. He viewed Robin Hood not as a hero, but as a crook. He argued that the romantic ideal of taxing the rich to give to the poor ultimately backfired because the wealthy find legal ways to escape, leaving the educated middle class to foot the bill. This diagram outlines the actual structure the wealthy use to protect their money. While many people associate corporations with physical buildings or factories, a corporation is legally just a file folder with documents registered with the state. Look at the flow of expenses here. Employees earn earnings, get taxed on those earnings, and try to live on whatever is left. A corporation earns money, spends every dollar it legally can on pre-tax expenses, and is only taxed on the leftovers. Kiyosaki applied this directly in his own life. While working as a salesman at Xerox, he wasn't trying to climb the corporate ladder. He used his daytime job to generate cash, hone his sales skills, and fund his corporate investments on the side, slowly buying real estate. A high financial IQ is the result of 4 skills working together: accounting, investment strategy, market analysis, and the law. Even with a high financial IQ, people still freeze up. Kiyosaki identifies 5 roadblocks that keep individuals from acting on their financial knowledge: fear of losing money, cynicism about the market, sheer laziness, bad financial habits, and the arrogance of thinking they already know enough. To move past these roadblocks, you have to understand where you currently stand. This chart is the cash flow quadrant. It categorizes how people earn their money into 4 distinct groups: employees, the self-employed, business owners, and investors. You will notice that true financial freedom only exists on the right side. On the left, as an employee or self-employed worker, you are trading your time for dollars. On the right, business owners and investors have built systems and deployed capital so that their money works for them. Making the jump to the right side requires a shift in how you view work. Instead of seeking technical roles for a higher paycheck, you should seek out roles that teach you crucial business skills like sales, marketing, and leadership. You work to learn, not to earn. Ultimately, every dollar that enters your hand represents a choice. You can spend it on liabilities and join the middle class, or choose to invest in assets and your own financial education to build wealth. Which side of the cash flow quadrant are you currently in, and what is your plan to move to the right side? Let us know your biggest takeaway in the comments, and thanks for watching Know the Book.